To the floor show and trader Scott Redler along with Motley Fool's Shelby McFadden. Scott, let's get right to it here. The market looked a little overbought. This doesn't look too alarming, does it, for the S&P and the NASDAQ to be in the red?
No, actually, it's more, I would say, healthy, because you just had a big 4-day move and it was getting ahead of itself. So with a little bit of a pause refresh, I think that traders are welcoming it. So at this point, I'd like to see the S&P hold above, just say like 5150, 51 and a quarter. We saw 5200 yesterday. So if we digest here for a session or so, I do think we're going to probably attempt to take out those all-time highs that we just saw over a month and a half ago at some point this summer.
Yeah, we're at 5183 right now, so holding above that level that you just talked about. Is it going to be earnings still that have the power to drive? I mean, this morning alone, we got Shopify. By the way, the president of Shopify, Harley Finkelstein, is coming up live in just a few minutes. We got them. We got the parent of this network, Fox Media. We got Teva Pharmaceuticals, a lot of different areas. Or do you just wait on those data points to see things move?
I think it's going to be more of a narrative. Every narrative has propelled this market forward, and at this point, I think the market's looking at a bit of a Goldilocks take again. We saw the jobs report come down. We see the consumer slowing a little bit, but that's what the Fed wants. But the market also wants to see rates stay around here or come down a little bit. The market wants that rate cut in September. We want 1 or 2 maintenance cuts. That's what they're starting to call it. So if we could see a CPI and PPI a little lighter next week and see earnings just do what they've been doing, which is about average, a little bit above average, I think that'll help us coast into the second half of this year and make new all-time highs in the S&P.
Although you look at Shopify, and we'll ask Harley about this, but that stock is tanking down 20%. And then you also have a name like Fox doing very nicely today, up 2.25%. Teva also popping. Uber, though, down. Let me get to Shelby here, because Shelby, all of these weigh in with the consumer, do they not? What do you see as sort of the temperature gauge of the U.S. consumer at the moment?
Yeah, at this point, beyond the regular macro readings that we're getting from, on our regular monthly basis, one of the temperatures we also look at is within those earnings calls, how are consumers shifting between things like brands and private label? That's something that I was looking at in particular with Kenvue's call coming out yesterday. A lot of things like Tylenol, Advil. At this point, if the belts are tight, there's almost no reason not to choose a private label. So taking a look for where consumers are going ahead and shifting down. We're also seeing it in use of credit or lack thereof, going ahead and choosing to spread out their payments instead of having to face higher APRs. So there's a lot of different places that we can go ahead and take the temperature of consumer health across the various types of data that we can get.
Okay, and you're on with Scott here, who is more of a technical guy. He's a trader, which is a lot different from what you guys do. But Scott, what Shelby just discussed, is there a way to put that through a crucible and say, invest in this, this, and this?
Well, as traders, you're very stock specific, and you saw Shop come out, and Shop was down, 18 to 20%, and then some people tried to extrapolate that to Amazon, which is near an all-time high that's actually digesting very well, that I think will make new all-time highs within the next few weeks or coming, in the next few months. So you can extrapolate what you want, but not everything is created equal. Every company now is diversified, have different baskets. I think it's very specific right now. That's how traders are making money. There's haves and have-nots. There's sectors that were great. Like a quarter ago, we were talking about buying gold and silver, and now it's pausing, and then you rotate to a different sector. Then you had the Mag 7 that turned into the Mag 2 that now next quarter is going to turn into a different flavor for alpha. So for right now, I think we're consolidating. We're going to see some new leaders come into fruition. We'll see the semis that are consolidating. I think ARM, like you said, is very important coming out after the close. That'll tell us whether or not there'll be a little hiccup in the next month or quarter, which I don't think there will be. So we could stay with the leadership of AI semis.
Shelby, when you look at your picture of how the consumer is doing, I think it's really interesting that you've got your eye on MasterCard. Why that stock in particular?
MasterCard is held widely across our portfolios at Motley Fool Asset Management. And one of those reasons is that because at the end of the day, they make their money on the transactions, right? And it's a very stable business that is not only simply making the transaction happen, but it's securing privacy. It is making sure that all of the rails for payment are equally as accessible. And even more importantly, it's constantly perpetuating that sort of war on cash. So there's always going to be that incremental transaction that you have to make, regardless of how much that specific item is going to cost. Okay. So in many ways, we do realize that there are certain companies that have a bigger stronghold on the things that Americans and people all around the world have to do. And that thing is purchase. And so we see them as very well insulated when it comes to consumer exposure, but not in such a cyclical way.
Yeah, they're the toll roads, right? They just,
Yep.
no matter what people are doing, they make a little bit of money. Scott Redler, Shelby McFadden, good to have you very much.